Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. And after some time, I must say, we're a full house. Morning, guys.
We are a full house. Morning, Prashant. Morning, Nigel.
Morning.
And what about the rains? I
Out of nowhere.
Generally, I love the rainy season. I love the monsoons. But this time, it's just come out of turn. And it's kind of just, it's a wake-up call about climate change, about unseasonal rains, the impact it would have on the crop, etc. And it's kind of scary, right? I mean, with the kind of volatility that we're seeing in terms of the weather.
Well, that's right. I mean, and in a few minutes, if you got off the sea link, it was, already a bit flooded as well. So difficult times, right? I mean, you have 30 minutes of rain and to see something. No, not great morning.
Not a great feeling. No, not at all. But for the market, I mean, there's a bit of a relief rally, right? So I think that should help.
A little bit of relief rally, but, it's just kind of on tender hooks. And I think it's been that way now for the last, almost 2-3 weeks now, I think more. It's been some of the most volatile markets that we've seen in a long, long time. I mean, I think not in terms of the depths of the crisis, but in terms of volatility, this would be up there with, some of the days of 2008, etc. Anyway, last night was a bit more calmer. So we got a bit of a bounce in US markets. The S&P was up about 0.9%. The Nasdaq was up a little lesser. The European market indices staged the real comeback. I mean, they were all kind of smashed up on that 81 issue. But, the indices ended, the Euro Stoxx 50, the benchmark there ended about 1.3% in the green, which is not bad. Now, there was, of course, some reassurance from central bank leaders, etc. But also, latest data shows that there was no major take-up on the new central bank swap lines. Remember, a few central banks had come together, most prominently the US Fed, developed market central banks had come together on Sunday and basically said that we will be ready to offer swap lines in terms of liquidity help to anyone who needs. And the latest data shows that there has not been much take-up on that. There were worries because, remember, last week we were discussing how the Fed discount window was seeing a lot of borrowing. Money was moving out of equities, etc., into money market funds. The highest quality money market funds basically showed risk aversion. But the latest data, at least from the new swap lines which were announced on Monday, the emergency swap lines which were announced, shows little by way of take-ups. I mean, you can read this to mean that maybe things are thawing a little bit. Now, the waiting game starts for one of the most keenly awaited Fed meetings. I mean, every Fed meeting is keenly awaited, but this one is also the toughest for the Fed itself because they have to choose now whether they want to slay inflation with more rate hikes or they want to basically deal with one of the severest banking crises we've had since 2008. We've not had this kind of upheaval in the financial system, which is the heart of any sort of economic system, since 2007, 2008. So a rate hike, some say, well, yes, 25, others say maybe we get a pause. There are various permutations and combinations. Maybe they hike by 25 and say, now we'll wait and watch. Maybe they don't do anything and say, well, we're not doing anything now, but maybe in the month of May we will. So that's the Fed. And I think over the next 2 days till we get the decision, there will be a fair bit of chatter around this. And this is an important one. We'll discuss more about this. Now, the Nifty coming to the market here took support at the 16,850 level. It's a downward sloping channel. And the market took support almost exactly, a little lower than that, but at 16,850, it hit that level and then bounced very sharply, almost a 150-point bounce from the day's low. There are enough and more resistances. It's been sell the rallies kind of a market for a while now. So 17,145, 17,200 are the immediate resistances around which the market will find some selling pressure. Let's see if you're able to take those levels out. The market has come off here quite a bit as compared to markets out of which some of these problems are emanating. I mean, the S&P, for example, is absolutely flat since the Wednesday before last when all of this began, whereas the market here has lost almost 6% in value. So keep that in mind. Bank Nifty is doing much better. It's been making higher lows. I mean, yesterday's low was higher than previous day's low and and so. For 2 days now, it's been making higher lows, which is a good thing, stronger than the Nifty. On the way up, a reversal level in which basically a short-term reversal level, flipping from bearish to bullish, at least in the very near term, would be 39,780. So keep that in mind. And on the way down, the recent low of 38,613 must be protected. So just a way to kind of set up things in terms of how you want to think about the markets. It's still very fragile. People have burned their fingers and they'll be looking over their shoulders to see if there is another set of bad headlines or bad news which is going to hit us. The SGX so far is indicative of a 70-point up move. Sonia, hi.
Absolutely. I mean, there's definitely caution on board, right? I mean, a classic indicator is the FI short positions. It's the highest that we've seen in a very long time. An indication that perhaps, there is still a lot of risk aversion left towards equities. In fact, this morning, you may see a relief rally. No two ways about that. But will it get sold into, as has been the case over the last many days? That's the big question. So there's definitely caution once again in the system. But there was a relief rally across the US markets. The Dow was up almost 400 points, and that's largely because of several banks coming to the aid of First Republic. So 11 banks together have now deposited $30 billion into First Republic, and now there are other options that are being considered, including investing into the bank. So banks like JP Morgan, etc., have come forth and they are considering to put more money on board in order to bail out First Republic Bank. So those efforts are what caused a little bit of a relief rally, but the bigger question is that whether there are more banks like First Republic that are in the wings waiting to sort of show up and cause further damage to the banking system. European markets also saw a bit of a relief rally. The DAX was up, the German DAX that is. But let's not forget that the Nifty now is very close to the September 2022 low of 16,818. That has been a firm line in the sand, which hasn't been broken up until now. So it could be a bit of a support for the market in the very near term. Time will tell. But the mood is definitely cautious. In the last 11 trading sessions, FIs have sold over 11,500 crores. It's heavily short. The shorts are pretty high in the system as well as far as FIs are concerned. For the Fed policy, the expectation was a 25 basis points rate hike, but now there's also talk on whether the Fed may pause this time around, considering that there are other issues to cater to, like the banking crisis in the US. So let's see what happens. We won't have to wait too long. Tomorrow the FOMC decision comes through, but until then there could still be a lot of volatility in the system.
Well, that's right. You mentioned a couple of times about how the FIs aggressively net short. Will that call for an aggressive reaction? If you get any spurt of good news, maybe in fact we could see a big rally from here, given the fact that the 16,850 odd mark has held out. Now let's give you a couple of cues. Yesterday we ended off where we really started. So we started closer around the 17,000 odd mark and we ended off closer around the 17,000 odd mark. Now today the global cues are looking a little bit better, but part of that would be factored in because yesterday we recovered 150 points from the day's low. The FI net shorts, they're at record levels. The bulls though, they are coming into fight at around 16,830 to around 16,850. And we have seen that in the last few sessions. What did the FIs do yesterday? Well, we had a relief rally, but they added more than 20,000 short contracts. That takes their short positioning to more than 90%, added around 91% odd. And I was looking at the net short positions. I have never ever seen, I think this is a record number, close to around 200,000. 194,000 is what the net short positions, that's the short positions minus the long positions. Even when the pandemic broke out, at that time it was around 170,000 odd. So it's the highest net short positions that we've seen from the FIs. What do they do on index options? Well, they bought puts yesterday, 40,000 put contracts. The problem is that at higher levels, they continue to write calls. And yesterday as well, they wrote close to around 100,000 calls. A couple of strikes that were active, the 16,900 call as well as 16,900 put, very, very active. Maybe some part of the street is playing for that range of around 450 points, 200 points higher from that 16,900 odd level and 200 points lower as well. Crucial levels to track. 20 DMA is far away, so the near-term resistance comes in at around 17,150 going by the options data, while the support level 16,830 to around 16,850. The Nifty Bank is going to be very, very important because it's bouncing off that 38,800 odd mark. But the 200 DMA, if the Nifty Bank can get close to that 200 DMA and hold about those levels, then we are bracing for a bit of a short covering bounce. I don't think you chase the opening, but maybe you look to buy the dip with the stop loss that we've seen, the recent lows, 16,830 to around 16,850 odd. HDFC 50 is suggesting a 70-point uptick.
Okay, let's see how it goes from here. By the way, there's really steep falls that you're seeing in the US markets. I mean, First Republic was down 40% in one session, right? I mean, that's surprising, but it doesn't surprise us anymore. I mean, with the kind of collapses that you're seeing across the board, but it was still a really steep fall that you saw in one single session. There was a 40% slide on First Republic. But lots more coming up in the next 2.5 hours. Before we start, let's tell you what's lined up. In the first half hour of the show, we'll get you updates from the market across the globe. Arvind Sangha of Geosphere Capital Management will be joining in. to discuss the trade setup. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we will do a fundamental stock analysis with Prakash Diwan as well. All right, on the equities front, first up we have Venugopal Gare of Bernstein, who says that we are heading into a different kind of downturn. While various macro indicators will see a slowdown and these factors tend to show the worst values after the peak of a crisis, the trend and magnitude point to a significant variation from 2008. The problem will be less deep but will last longer. Even from a recovery context, they are looking at a U-shaped recovery with less pronounced depths instead of a V-shaped one.
All right, some money market views as well. Bhaskar Panda of HDFC Bank says risk on sentiment is making a comeback post-handling of banking crisis in US and Europe. He says the dollar index is trading near 103 pivot as of now. He says oil prices remain subdued, which is positive from an India point of view, and adds once things settle down, volatility in the dollar INR may come down, and he expects the pair to settle below the important 83 to a dollar mark. Bhaskar expects the dollar INR pair to trade in a range of between 82.45 to 82.65 for the day.
All right, and on the bonds, you have a comment coming in from Bhaskar itself. He says that the Indian bond yields have eased a bit, tracking US yields. Oil also remains lower, and given this, he expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.35% for the day.
All right, so we got the calls in, money market calls in as well, but let's run you through the important stocks that you need to track in our special top 10 segment, which we'll get to in just a bit. We're looking at Bharti Airtel, Adani Enterprises, ONGC, Oil India, HDFC EMC, PVR, UTI EMC, J Kumar Infra, PNC Infra, and Sterling and Wilson Renewable Energy. They are stocks on the positive side, and there are no stocks that we're bracing for which will react to negative news.
Okay, well, Arvind Sanger is joining us, Managing Partner at Geosphere Capital Management. Arvind, great to have you with us here. Good morning. Thanks very much. So we are left to reading what's going on in the underlying financial system, looking at, I guess, financial markets themselves and how they react, whether there is a bit of thawing or, the intensity of the volatility will likely remain very high. What's your own view at this point?
Well, look, the banking system in the U.S. doesn't have an asset problem in the sense that, their loans are fine. There is no loan crisis. Their government bonds have lost value, but if they're held to maturity, they're money good, right? The U.S. government treasuries are not going to be a problem. So the problem lies on the liability side. And the problem on the liability side is that there's so much nervousness about whether or not if somebody else is taking money out, if I don't take my money out, and the money, banks always have an asset liability mismatch. They borrow short and lend long. And so I think the solution lies, which has been now talked about for the last day or two, is in guaranteeing a broader set of deposits, because if you guarantee those and the panic goes away, then the banking system is fine. It's the panic about, if I don't pull my money out, somebody else might put their money out and the bank will go under that is driving this. So there is some talk today. We're seeing that maybe there is some way they might find to guarantee deposits. The problem is Congress is deeply divided, and I don't think the Republicans are going to be trying to do something like this. So it is going to be tricky. The solution is that, and the minute you do that, then the crisis starts to abate. So I think the problem is lot less deep-seated than the asset problems that preceded the 2008 crisis. So in that sense, the solution is out there. I'm not sure how quickly we'll get there.
Okay, Arvind, hi, good morning. But do you have any indication of whether we are close to the bottom for this market? I mean, there's so much bad news that has been thrown at it, right? There's an impending recession, there's a banking crisis, there's slowdown in growth, etc. But do you think that all of it has perhaps been priced in? Maybe another 5-10%, but that could be it.
I agree wholeheartedly. I think that the crisis is a lot less dire than it seems. It'll be interesting to see what the Fed does in a couple of days, because I think if the Fed sees the crisis as much worse, it'll pause. And in a way, I think the market will do worse if the Fed pauses, because people will say, what is the Fed seeing that we don't see? If, on the other hand, the Fed raises interest rates by 25 basis points, and at the same time there is some solution on the deposit guarantees, then I think the crisis quickly passes and the markets rebound quickly. So I think there's a couple of things out there this week that are critical that could help the market either gain confidence or get a little more nervous.
Hi, Arvind. Good morning. Arvind, we didn't speak too long ago, and you are fairly positive on the Indian markets. So now the incremental equity allocation will be moving to India, since you were as positive on it. And also, I just wanted your comment. Some on the street are comparing this 2023 with 2008. Going by the central bank action, the kind of data that we have, I'm reading a Bernstein report, they believe that that's not likely to be the case, and it's very, very different this time around. Are you in that camp?
Absolutely. As I said earlier, this is not an asset problem. This is not a bad loan problem. This is not banks doing stupid lending. This is about people getting nervous that the liabilities side, the deposit side is not safe. We got to pull our money out because the bank might go under. So it's a very different crisis. If we take away Credit Suisse, which was a bad management, which had multiple problems, none of the other banks that are in trouble, we use First Republic as a bank. None of these banks are in trouble because they did bad lending or they did bad, decision on that front. They just put their money in treasuries, and those treasuries have come down short term, but long term, I think the money is good if they're held to maturity. Now, as for the India question, I absolutely think that India does not have a banking problem. India has already gone through its NBFC problem, its banking, bad loan problems and all that. So this global crisis on deposit side is not something that has any India echo in it. Therefore, I think India is somewhat immune to that. It is not immune to a global recession. I think the risk of a recession, which I talked about last 2 weeks ago in your studios, is still there. And if anything, it's a little more heightened now in the West. But I think the Indian economy is somewhat less susceptible to the impacts of a Western recession than almost any other emerging market or major economies in the world. So therefore, I would be looking at India as a buy opportunity in this sell-off.
Yeah, I mean, Arvind, it's kind of crazy that from the Wednesday before last, when the Silvergate went down, right? That was when all of this began. Not last Wednesday, but the Wednesday before last week. The S&P is flat, and the Nifty is down 6%. So there is something else going on as well. I mean, which is the old rotation out of best performing markets into some of the poor performing markets. I mean, and of course, it's getting conflated with all of that, which is going on the banking side, right? Yeah,
it's risk off. It is risk off, and risk off is not always fair and thoughtful. It is knee-jerk and short-term. I think those knee-jerk short-term moves, which are not always rational, but driven by irrational fears, create opportunities. And again, the day-to-day, week-to-week markets can act strangely, but I think keeping a clear vision in mind is useful in these times. And I think the clear vision is that this is not a 2008 type of financial crisis. And if there is overselling in sectors or markets where it doesn't make fundamental sense, then this is a good opportunity to buy.
Okay, on that optimistic note, we will let you go. Arvind, thanks a lot for joining in. So this is perhaps an opportunity to buy. This is not 2008. This is not the kind of financial crisis that we've seen in the recent past. Of course, there are issues that need to be addressed, but there is no need to panic. Let's slip into a quick break on that note. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Do stay tuned in. Welcome back to Bazaar Morning Call. This morning, there is a relief rally across most global screens, and the SGX Nifty is also indicating a start in the green. But then we have that big event looming upon us, which is the FOMC meet. So ahead of that, things could perhaps be a bit cautious as well. We have our entire team joining in to help us with the list of top 10 stocks as we begin our trade this morning. Rima, let me begin with you. You're watching Bharti Airtel today?
Yes, hi, good morning. So Bharti Airtel has introduced new, cheaper postpaid family plans. Remember, last week, Reliance Jio introduced some new postpaid family plans, which indicated Jio is getting aggressive into the postpaid segment, and now Bharti has come out with a counter. What they have done is that the earlier cheapest family plan, which means that with your regular SIM, you get some incremental SIMs for your family. That's what makes a family plan. The cheapest one was $9.99, where with one SIM, you get 3 additional SIMs, right? It caters to a family of 4. Now they've introduced a cheaper variant, a $5.99 version, where along with one SIM, you get an additional SIM. So it's not really comparable, but it's just a lower price point. If someone is value conscious and price sensitive, they have another cheaper option. As I said, it's not comparable because Bharti's $9.99 earlier plan offered you 4 SIMs. This $5.99 newer plan is offering you only a total of 2 SIMs, an incremental 1 SIM. How does this compare with what Reliance Jio announced last week? Well, again, not directly comparable, but Reliance Jio's plan for 2 SIMs, which is what Bharti has introduced right now. The comparable one is $498 minus OTT connections. But if you want OTT connections, then it is $798, right? So it straddles on both sides of Bharti's price point. So Bharti has also introduced 2 newer Airtel Black variants, which basically is a combination of DTH, fixed broadband, etc. So they've also again introduced lower price points over there. So now earlier Bharti's postpaid plans were very few, very selective, and they were more the higher price points. But now they are trying to cater to the various different price points. So that indicates that they don't want to let any part of the market go, and they are countering Jio's plans in postpaid. Back to you.
Okay, all right. Thanks a lot for that, Reema. Let's hop across to Vivek. He's here to tell us about Adani Enterprises. Morning, Vivek.
Well, good morning. So Adani Enterprises, yesterday we did report how, certain newspaper reports were indicating that the entire 34,900 crore project, that was the entire petchem to PVC project as far as Mundra was concerned, was being put on hold. So yesterday, the company has come out with a detailed clarification. So what's actually happened is that now they've made this particular project into 2 separate projects, which is the Mundra Petchem project. In the Petchem project, the company says, the group says that they're hopeful of achieving financial closure within the next 6 months, post which work will start. However, when it comes to the green PVC project, what the management is indicating is that, the financial closure of this particular project is still under consideration with the financial institutions. After, once they get the entire financial closure for the green PVC project, post which they will start construction. So some, relief rally expected as far as Adani Enterprises is concerned on the back of this clarification.
Vivek, thanks very much for that. Now, oil companies in focus on the back of changes in windfall taxation. Sonal has got the details. Sonal, hi, morning.
Good morning, Prashant. Well, 2 reasons why oil producers will be in focus. The first thing is that Brent crude prices, they have at least halted the decline that we were seeing yesterday. So right now it is at that $73 per barrel mark and has recovered from levels of $71 per barrel that we saw yesterday. Additionally, as you pointed out, there has been a revision in windfall taxes. For crude oil production, it has been cut to 3,500 rupees per ton versus 4,400 rupees per ton, so which is a relief for these oil producers. However, on diesel, it has been increased to 1 rupees per litre versus 0.5 rupees per litre. And on petrol and aviation fuel, it continues to remain nil. So all these oil companies in focus today.
Okay, thanks for that, Sonal. Well, let's hop across to Surbi. She's joining us to fill us in with some more stocks that are in the news. Surbi?
Hi, so today I'm looking at some interesting deals. The first one is HDFC AMC. Now, yesterday the company recovered 6% from its lows when 2.4% equity changed hands. Now, according to the data released post-market, SBI Mutual Fund bought 2.2% stake in the AMC at rupees 1,600 per share, which is a 5% discount to yesterday's closing price. GQG Partners Emerging Equity Fund sold about 1.16% equity out of the 2.28% they hold in the company. Now, obviously, GQG has been in the headlines after acquiring stake in the Adani Group companies, but the details of the other sellers are not available yet. Next on my radar is PVR, where Warburg Pincus, through its affiliate Berry Creek Investments, sold its entire stake, 2.49% in the company. Now, the transaction totaled more than 380 crores. Now, major mutual fund houses were the buyers here. SBI Mutual Fund again bought shares worth 229 crores. ICICI Pru also bought stake worth 100 crores, which is close to 6.4 lakh shares. And Society General also bought 3.2 lakh shares. And lastly, UTI AMC, where PPFAS Mutual Fund bought 11.22 lakh shares at 636 rupees per share, which is a total of 714 crores.
All right, thanks a lot for that. Well, let's go across to Vivek once again to talk about more stocks that are in the news this morning. Vivek, what do you have?
Well, quite a few stocks, quite a few award wins coming in as far as the entire infra space is concerned. First on the list is J. Kumar Infra. The company, along with its JV partner, has got a letter of award from the Bangalore Metro Rail Corporation. Now, the total contract value is 182 crore, and this is for the construction of an airport depot within the metro. Now, PNC Infra, another significant order win coming. Haryana Rail Infrastructure Development, a project coming in there for the company. Total cost of the project is 771 crores, and the construction period is for 30 months. Lastly, Sterling and Wilson Renewable Energy will remain in focus. A significant order win for this particular company, a 2,100 crore order win. This is for a renewable project development, and the order has been got from NTPC's renewable energy arm. Total capacity of 1,500 megawatt. Bid value includes O&M services. So 2,100 crore order win, significant as far as Sterling and Wilson Renewable is concerned.
All right, thanks a lot for that. So here's a quick recap of our top stocks to watch today. Stocks with positive news flow. There's Bharti Airtel, Adani Enterprises, ONGC, Oil India, HDFC-AMC, PVR, UTI AMC, J. Kumar Infra, PNC Infra, and Sterling and Wilson Renewable Energy. But guess what? There's no stock with negative news flow that's likely to open in the red. That won't be the case, of course, but a lot of positive news flow coming through this morning. All right, let's also find out what's happening in the world of commodities. Remember, Brent had a steep fall yesterday, but overnight, I think there's been a little bit of recovery. Manisha Gupta is joining in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, yes, after 12% of decline in the previous week, we saw 4% of a cut yesterday. The market did close a percentage point on the higher side. So that doesn't really seem to be holding because the dollar index is back above 103. We are looking at positive cues in the dollar index, and that's weighing onto the crude oil prices. So we are back around those 15-month lows that you saw in the markets yesterday as well. Well, while the U.S. Fed may pause or hike interest rates by 25 basis points, that is something that has been supportive for the prices. The other thing that the markets will watch out for is the OPEC and allies meeting. Well, that's on 3rd of April, and any change in stance from there would also impact the prices here. The other area which has done slightly better for itself has been the metal space. Remember, this has seen a decline in the previous week too, but with the dollar moving around, we are looking at pressure here. Having said that, the Chinese demand has picked up in the month of March. We are looking at the copper inventories at a 2-month lows in China, and the Chinese copper premium is at the highest since December. So that tells you that the demand is coming back. So whether it's copper, aluminum, and zinc, we have seen overnight gains come in across these metals.
All right. Thanks very much, Manisha, for that. That's the action from the commodities space. Well, we'll take a very quick break here. Up next, Prakash Diwan will join in for some fundamental stock analysis. Later, we get you an exclusive conversation with K.K. Mistry, Vice Chairman and CEO at HDFC on the NCLT approval for the HDFC-HDFC Bank merger. Stay tuned. All of that comes up.
Welcome back. Hope you're having a good morning. Well, for starters, the SGX Nifty suggesting that we start off with a gain of close to around 70-75 points odd. So building onto yesterday's gains, we recovered 150 points. That would be a 220-point recovery from yesterday's lows. Sustaining that is going to be most crucial. But plenty of stocks are going to be in focus, and Prakash Diwan joins us to help us out with some fundamental analysis. Hi, Prakash. Good morning. Well, Prakash, crude oil prices have seen a sharp correction to around $73 per barrel odd, which is good news for various companies. What are the companies you're looking at out there? Some of the OMCs did very, very well yesterday, even in a weak market. You had paint companies as well that are sounding quite positive. We had Berger Paints case in point yesterday. Would you look at a couple of these counters to play this crude decline theme?
Good morning, Nigel. So, I think while the softness in crude is understandable and welcome, I'm not too sure how long that sustains. This of course has been triggered by this sharp realization that if you're closer to a recession than any other time, this is it. But having said that, structurally, that's something which will probably take some time to translate into transportation, logistics, packaging costs for a lot of our businesses, which have been struggling with higher input costs, particularly on the FMCG and consumption, broadly the consumption theme. So I would wait for that. But by and large, airlines is definitely a direct beneficiary of this. And if this sustains even for probably 15 days a month, there's a huge difference it ends up making to their P&Ls. So I think that's the immediate and most direct benefit. But for other sectors, other businesses, I think it'll be a while before the benefits start accruing. So I would wait for that. But yes, it's definitely good news at the back of all this clouded environment that you are sitting.
Okay. Prakash, hi, good morning. I wonder your thoughts on Reliance. You know, back to back in the last 1 week, there have been 3 brokerages that have written positive notes. There was Jefferies, JP Morgan, and now CLSA. And all are saying the same thing, that perhaps the worst of the bad news is in the price. And this is a good time to buy Reliance. Would you agree with that?
Absolutely, Tony. Absolutely, I would agree because not just the fact that the optics look so attractive. It's 5% close to its conservative estimate, as some brokerage talked about. What you need to understand is that while we have been waiting for that much-awaited tariff hike and the 5G impact starting to kind of trickle into the revenue side, Bharti has gone ahead and hesitatingly, gingerly, they've started raising, tariff. They've started hiking tariffs in some of the plans, some of the cities, some of the geographies. But Reliance Jio hasn't yet kind of gone all out to do that because they're still probably letting this 5G rollout be much more, intense or reach a critical mass. The other thing that you have is crude softness, which Nigel just spoke about. I mean, that you've seen how the government is so timely responded to that change in the windfall against that. So that's also going to help. And remember, gas prices, the way they are today, we have not yet seen that full quarter, of benefit translate into the P&L for Reliance, and that's also going to start accruing. So I think from a sum of parts basis, if you look at Reliance, should probably be closer to 3,000. Even from a 1 year forward perspective at very, very decent valuation, very undemanding valuation, where it's not. So I think it's the mood of the market, it's the ETF outflows that has kept a lid on this. But somewhere it has to kind of give in and correct. So on the way up, I'm sure there is a very strong tactical case for it. Of course, from the long term, it continues to be very strong. But from a shorter term perspective, also, I think there is a very clear upside.
Prakash, hi, morning. In this correction we've been seeing for about 2 weeks or so, anything which has become very, very attractive valuation-wise, in an unwarranted way? Any names?
Prashant, so that is always tricky, right? I mean, anything that gets very attractive, you really start wondering whether there are any fundamental reasons to back that. But let me tell you what is seeming like a lot of noise, around what's happening, and these events keep on happening while we know at the back of our mind that our banks are not as vulnerable. We don't have a market which is so largely the 81 bonds market, which could probably cascade into a little bit of a worrisome spot. We don't have all those things, but we are still seeing that reaction on the market, which is purely liquidity driven. So the moment that liquidity stems, the outflow stems, things could start looking very, very different. I would bet on some, cases like steel, particularly larger companies like Tata Steel, which have consolidated so much, which are in the process of merging some of their businesses together, and they've deleveraged themselves. So what happened to sugar, let's say 3 years back, when the deleveraging cycle happened? I mean, you're talking about people, sugar companies giving 200% dividend so commonly. So that's exactly what's going to happen in the steel business once China starts revving up. So we've built capacity, whereas the rest of the world is actually slowed down or shut down a lot of the capacity. So that effect is something which will happen. Probably take a month or 2 or 3, but somewhere around, I think, the surprising element of this whole shakeout is going to be some of these infra companies, some of these steel companies, and some of these auto companies also, which we've written off right now. Nobody's talking about it because the numbers being not great. But these are pockets where I think there's going to be a huge upside as and when things start looking a bit normal or seeming normal, even if they are not normal.
Okay, we'll keep an eye out on that. Let's just take a breather from this market conversation and get talking to some corporates as well. Prakash, just stay on. The NCLT has approved the merger of HDFC into HDFC Bank in what will be the biggest ever amalgamation in Indian corporate history. Remember, the merger has already been approved by the exchanges. To discuss this, we're joined by K.K. Mistry, the Vice Chairman and Chief Executive Officer of HDFC. With the NCLT approval in place, Mr. Mistry, what are the other approvals that are awaited now, if you can tell us? And are we on target for the merger to take place by, say, Q1 of FY24?
Our target always was that the merger would get completed by June, July, which is what we had told people, we told investors, we told the media. The approvals, some of the approvals came faster than we expected. So we are absolutely on track. And my sense is that sometime towards the latter part of June or probably July is the time when the merger will get completed in all respects. Now, what you must understand here is that HDFC is not a single company. We are a financial conglomerate. So we have a life insurance business, an asset management business, a general insurance business. Of course, we have the bank. So we have different regulators. We have RBI, we have the National Housing Bank, we have IRDA, we have the pension regulator, and of course we have SEBI. So we have 5 different regulators, and each regulatory process involves certain procedures to be carried out. So there are certain procedures which need to be carried out, which is what gives us confidence that by our estimate, by June, July, this merger will get completed in all possible respects. The integration process has been going on now for a long time. There are a couple of hundred people together from both entities which are meeting time and again to look at integration, and there are integration teams for every single activity. And these integration teams are meeting periodically, and there is an overall integration team comprising 3 senior people from HDFC and 3 senior people from the bank who oversee the entire integration process. So everything is on track.
All right, that's good to hear, Mr. Mistry. Good morning. I mean, you also have asked the Reserve Bank for some considerations. What is the update on those? And are you still awaiting replies from the Reserve Bank?
We are still waiting for RBI to respond, but usually we understand that before the merger gets completed, we will certainly get a response. But exactly when we would get a response, honestly, we don't know.
All right, Mr. Mistry, how do you see the spillover impact of SVB, Credit Suisse impact on the financial sector here in India?
Almost zero. The Silicon Valley Bank, actually almost none. As far as Credit Suisse is concerned, Credit Suisse fortunately will get revived from what we understand from media reports, but it has a reasonably large in business in India. So there would be some degree of some banks which would have some kind of counterparty arrangements with Credit Suisse. But as far as the Silicon Valley Bank is concerned, the impact on India will be negligible. Even with Credit Suisse, the impact, if any, will be more in terms of companies which have any kind of derivative lines or any kind of hedging facilities that they have with them. But I'm sure all of these will get protected by whichever is the resultant entity from Credit Suisse.
So have we seen the tenor of the loan books increasing as lenders are easing or mitigating the burden of higher interest rates on EMIs of their customers? Just trying to understand whether the loan book tenor has been increasing or not.
When rates go down or rates go up, and that will, as I said, happen 3-4 times during a 15-year period, usually what is done is the tenor of the loan, the term of the loan is either increased when rates go up or decreased when rates come down. This has happened many times in the past. I can think of 2013, 2007, 2018, so 3-4 times in the last 10 or 15 years. And usually it has never resulted in any kind of asset quality issue or anything like that, because rates, the term goes up and then it comes down when rates come off. That's number one. Number two, most lenders, and of course HDFC would be one of them, have a process in place that if the extension of the term goes beyond a certain comfort level, then the EMI in those cases is increased and the customer is, educated, explained what needs to get done. So it doesn't create any risk to the banking system as a whole. And similarly, the third thing I would like to say is that Indians by nature tend to be very debt averse. So it's a very common phenomenon in India that a customer comes back and prepays the loan. So it's not necessarily a full prepayment. Very often it's a part prepayment.
Mr. Mistry, how do you expect the Reserve Bank to react to the recent developments? And where do you see rates in India headed? That's a big debate also, because here, core inflation is still running hot. What's your view on RBI's monetary policy itself? Go on.
My personal view is that RBI's policy will be guided in a huge way by 2 factors. One is the data as it emerges, and there is that I'm sure RBI is watching every bit of data that is emerging on a day-to-day basis, and on what the US Fed does. again, giving you my personal opinion, I would say that probably what we may see is no increase in interest rates in the coming policy, or a maximum, in my view again, of 25 basis points increase in the policy. As we get closer to the date, we will be, there'll be more data which will emerge. The Fed policy result will be known to us later this week. So once that is done, one will get a much more clearer picture on whether RBI will do nothing now or will do a 0.25% increase in rates. But whatever it is, we are towards the end, almost at the end of the interest rate rise cycle.
Okay, got that, Mr. Mistry. Well, before we let you go, sir, we need to ask you this one question. Another group company, will you get dispensation on the stake in HDFC Life post that merger?
I would hope so. That's one of the things which we have sought forbearance from RBI. We've said that permit us to increase our stake in the two insurance companies from the existing level of 49% to over 50%. And the logic for that is that typically for a housing finance company, the regulations allow us to hold equity which is less than 50% in an insurance company. And we'd like to get back to over 50%, which is what in a bank you'd be allowed to do.
Okay, Mr. Mistry, thanks a lot for joining in and speaking to CNBC-TV18. Let's take a quick break on that note. On the other side of the break, we have Mitesh Thakkar and Sudarshan Sukhani who will join in for some technical trades. Stay tuned.
Okay, welcome back. We've got about 10 minutes to go for the pre-open session, and it's going to be a higher start. At least that's what the SGX is indicating. That's 75 points, a little better from when we looked at it at 8 in the morning. Anuj is here with a quick view on how he's seeing things. Anuj, hi, morning.
Morning, Prashant. A lot of things to watch today, of course, the biggest one being the FOMC meet, which starts. The outcome obviously comes tomorrow, but 25 basis point rate hike priced in. I think the other important cue today, which the market may take note of, is the unseasonal rains and the kind of damage that it has had on crops. I think that's something which could lead to some sentiment hit. There's weekly options expiry in finance nifty as well, so that's something I'll keep an eye on. On the nifty, the texture has been very clear. There's been selling in the first half, especially if you get a gap up, and there's been covering in the last hour or in the second half. So the texture is sell on rally and cover at lower levels. The levels to watch today, the zone is 17,066 to 17,146, and covering zone is 17,185. Why these three levels? 17,066 is yesterday's open and high. 17,146 is Friday's high, and 17,185 represents the maximum pain zone for the call writers at 17,000 and 17,100. The other thing is almost every positional long now has stop loss at 16,800. So my sense is that at some point that level might break. At least that's what the screen is showing you. But on the bank nifty, what's very interesting is yesterday, if you see the FI selling, it was largely in the index which is selling, it was largely in nifty and not in bank nifty. And within bank nifty, ICICI Bank and Axis led the recovery in last hour. So I think these two stocks are key to watch out for. The problem for bank nifty is it's repeatedly seeing rejection of the 200-day moving average. That's placed at 39,650. So 39,550 to 750 becomes the resistance zone. For the confidence to come back, you need to cross 40,000 and trade above that, which right now is a low probability event.
All right. Thanks a lot, Anuj, for that. Well, let's find out what the views of the technical experts, Mitesh Thakkar and Sudarshan Sukhani, are joining in. Gentlemen, morning to both of you. Sudarshan, do you think that this pullback could be sustainable, or do you think that it could get sold into, as has been the case for the last many days?
Yeah, good morning, Sonia. See, there are 2 points. One is that the pullback has probably more legs on the upside. So today, traders should be looking to buy any small dip or intraday consolidation and keep a stop under 16,950. So that's a trade we can take on the long side. And to your question, whether it is whether it will be sustainable, I have big doubts, which means that towards 17,200, you should also take profits and get out.
Mitesh, would you agree with that view? Good morning, gentlemen. What's your sense?
Good morning, Prashant. I've been suggesting that the markets will possibly chop around, do some base building in this range of 16,800 to about 17,150. I think that process is still going on. I would still want to see the index clear 17,120, 150 zones before going aggressively long. But till then, I think, we have not been shorting it. In fact, taking mild or minor long positions closer to about 16,820, 840 zones and keeping a stop below 16,750. So I think it's a market which could stop falling, but a reversal will happen only once we capture and start getting past 17,150.
Okay, all right. Good morning, Mitesh as well as Sudarshan. Mitesh, you go first. What are the individual picks you have for us?
Yeah. Morning, Nigel. I have more of buy calls today. 3 buys to a sell. On the buying side is a couple of FMCG names. HUL had a good candlestick price and volume action yesterday. So buy here with a stop below 24.90 for targets of 24.60 on the upside. Pidilite, after a good decline, is showing some signs of reversal. So buy here with a stop at 23 or just below 23.50 and look for a target of 24.20. And Godrej Consumer is a buy as well. Keep a stop at 9.49, look for targets of 9.85. And one sell call is on Havells. Here I would recommend selling with a stop at 11.86 for targets of 11.40.
Okay, and Sudarshan, how about you? What would your stock ideas be for the day?
Well, it's also more on the long side, but Sonia, you also understand, this market can turn down on a dime. It takes only 10 seconds for it to say, okay, no more further upside. So traders must be aware of that. But Ultratech Cement is a buying opportunity with a stop under 7,090. Aditya Birla Fashion is my only intraday short. It's been, you look at the chart, it's a big bear market there. Sell with a stop above 220. And like Mitesh, I also have Hindi Unilever, which is a buying opportunity. Had a big range yesterday on the upside. Buy with a stop under 25.50. Finally, I have a positional buy, that is Concor. Now, Concor went down, fell, and then for the last 2 months, it's in a trading range. So to that extent, it's outperforming the Nifty by not falling. It's a good quality stock. You can look at it as a positional buy with a stop under 570.
All right, gentlemen, good speaking with the both of you. Appreciate you joining in. And we'll speak again for those 9-10 calls a little later. We'll take a very quick commercial break, but we'll come back with Vasudev Banerjee, analyst at ICICI Securities. He's going to discuss the latest